Good evening and welcome to today's market wrap. If we had to sum up today's session in one phrase, it would be a structural repair on shrinking volume. The market did not form a unified direction. The major indices were flat to slightly lower, but a handful of tech giants bucked the trend and moved higher. This tells us that today was not a broad rally driven by new money coming in. Instead, it was a game of rotation, where existing funds moved from one sector to another. Let's run through the key numbers. The VIX, our fear gauge, closed at 17.08, down 1.78%. The 10-year Treasury yield climbed to 4.39%, up 0.83%. The dollar index DXY ended at 98.26, a modest gain of 0.23%. In commodities, WTI crude rose 1.53% to $97.24 a barrel. Spot gold edged lower to $46.91 an ounce. And Bitcoin, after breaking the psychologically important $80,000 level, settled at $79,890, down 1.78%. Now let's talk about sectors. The clear winner today was large-cap tech. Nvidia gained 1.77%. Tesla surged 3.28%. These two stocks became the sole anchor for bullish sentiment in the market. Why did money flow there? Because when the direction is unclear, capital tends to hug the most certain growth story, and right now that is artificial intelligence. On the flip side, the weakest sector was crypto-related stocks. MicroStrategy fell 3.74%. Bitcoin's drop below 80,000 triggered a wave of selling in these highly correlated names. There is one signal from today that we need to pay very close attention to. It is the divergence between the leaders and the index. Nvidia and Tesla were up, but the QQQ, which tracks the tech-heavy Nasdaq, closed lower. This tells us the market's breadth is extremely narrow. Most stocks are actually falling. Historically, this kind of divergence has often been a warning sign of increasing instability in the market. Let's zoom out to the macro picture. Today, the dollar and Treasury yields both rose, while the equity market fell. This is a classic triple negative resonance for risk assets. A strong dollar drains global liquidity, and higher yields compress equity valuation multiples. So the macro signal is clearly bearish. Any decision to go long must be based on very strong stock-specific or sector-specific logic, not on a bet that the overall market will rise. Looking ahead to tomorrow, Asian markets are expected to open under pressure. They will have to digest three negative factors from the U.S. session: the weak close in equities, the strong dollar, and the high Treasury yield. For China's A shares, we expect the CSI 300 index to trade in a narrow range and close slightly lower, with a range of -0.5 to +0.2%. For the U.S. market, we believe the trend of the strong getting stronger will continue. The ratio of Nvidia to ARKK, which represents speculative tech, is expected to widen further. As for Bitcoin, we see it entering a consolidation phase between $78,500 and $81,000. Let me give you a clear directional takeaway for your trading strategy. The bias for tonight and into tomorrow morning is hedging. Specifically, you could consider going long on high-alpha tech leaders like Nvidia, while shorting a beta proxy like the SPY or the IWM. This is a way to hedge against macro risk. However, if the dollar index continues to strengthen in Asia and breaks above 98.5, then you should abandon all risk exposure and stay on the sidelines. The key invalidation signals are the 10-year yield holding above 4.45%, or Bitcoin breaking below $78,000. If either of those occurs, all bullish assumptions are off the table, and the strategy should shift immediately to risk control and reducing positions. That wraps up our coverage for today. Thank you for watching, and we will see you tomorrow.